Mode.
Welcome, Tradespooners, to our pick for February 27th, 2014. We're going to be taking a look at a long position in Finish Line Incorporated, ticker symbol FINL. Taking a look at our Tradespoon proprietary risk-reward rating, where we're coming in at the low end of the range at 2. Taking a look at the proprietary value and momentum rating, we're coming in at an 8. As always, take a look at the detailed analysis report that we have here at Tradespoon. This just digs down into the rationale of the pick, all of the different technical and fundamental components, as well as our proprietary score ratings and explanations on those ratings. So take advantage of that. Let's take a look at the price action and the option information as we get into our picks. So we're taking a look at ticker symbol FINL, Finish Line, and the close price as of the 26th was $26.40. The 52-week high was $28.86, so we're right off those highs, and we're well above the 52-week lows of $17.63. We have a volatility change percentage. Now, folks, this is up 66%, so the implied vol percentage is up 66% from the 52-week lows. We have the return on capital at 150%. We have the probability of success at 65%, and that's for going into April expiration. And we have the estimated move being calculated today at $2.05. So we do have some heightened expectation of potential movement, and we'll dig a little bit deeper to see why that expectation is up as far as the vol, and we're seeing a pretty decent sized estimated move being calculated at this juncture. Now, the stock trade, we're going to buy stock, FINL. We're going to do that at a limit price of $26.40 or better. If we are filled at that limit price, we're going to put a seller of $4.20 above that entry price. So we're roughly going to be looking at $30.60 as a sell limit, good till cancel. We'll also have a stop loss in there. We're actually going to put the stop loss $4.20 below the entry price. So we're going to be getting out at roughly $22.20. So that we'll have that sell stop limit, good till cancel. Now, again, with the stock picks, use prudent size management. We suggest that you do no more than 3 to 5%. On the options trade, we're looking to buy the April $25 call. So we're giving ourselves some time right now, being at the end of February. The price is going to be $2.25. If we're filled at that limit price, we're going to put a sell limit above the entry price that we got into the trade on the $25 calls in April. And in this situation, we're going to put an order in at $4.50 to sell to close. The risk in this trade for the option is going to be the debit that we pay, so $2.20 or $225 per contract. As always, use prudent size management, and we suggest no more than 2.5 to 10% for you small traders. And again, of your buying power in any one position. So be very prudent on the size of the trade. Your option spread trade, we're looking at a bull call spread. Now, we've covered bull call spreads, as I've mentioned in other training videos. Right here under training and trading videos, we actually covered this. Trading spreads, part 1, debit spreads. The bull call spread is covered here. As a matter of fact, today on the 27th at noon, we're going to be doing credit strategies. We're going to be doing bull put spreads and bear call spreads. These are verticals that we discuss and are part of the picks. So take advantage of using these archives. I also have an expiration video, as you saw there as well. Let's go back into today's pick. For the spread strategy, we're going to be buying the $25 calls that expire in April, and we're going to pay $2.25. We want to reduce that cost, so we're going to sell the $30 calls for 25 cents. That means our net debit for the spread, the $5 spread, $25.30, is going to be $2. That means our total risk is $2 or $200. But because we sold the $30 calls, that limits our profit potential up to if the stock is at 30, which means we have $3 of profit potential. Our target gain is $2.90 higher than our entry price. So we're going to put a sell limit to sell the spread at $4.90. And again, use prudent size management. If you've never traded one of these strategies before, take advantage of using our virtual trade here at Tradespoon. Taking a look at the price action, you can see that the stock has pulled back up until January. Last month, it's been consolidating. So you can see that there's a little bit of an uncertainty here from the perspective of which direction it wants to go. It was bearish, and now it's neutral. So we're keeping an eye on that. Key stock events. This is where you're going to see the fundamental and technical events and the binary events. As I had mentioned, volatility percentage, the implied volatility percentage is up 66% off of the 52-week lows for vol. That's telling us that there's a heightened expectation of movement, and guess what? We're seeing now why. We're going into earnings season for this stock, and 327, which is a matter of fact before the expiration of these options. So that means that we do have an event that could impact not only the underlying, but it could impact the options. So we're going to keep that on our radar screen. And you see the fundamental and technical information that we have here. And as always, we have the news and commentary going up into today's recommendation of long finish line. Well, if you ever have need any help, you can always email us at info@tradespoon.com. Take a look at our training videos. We're building out those archives with our partners at MoneyBlock and Trading Block. And as always, if you ever need anything, again, just email us at info@tradespoon.com. All right, folks, that's it for today's pick, February 27, 2014. I want to wish you a great trading day, and we'll see you tomorrow.